It is that time of the night to get into a SoFi stock update because SoFi was down 9.14% in regular trading, up 1.05% currently in after hours. We did hit a low of $8.52 per share. Now, why did SoFi drop 9%? It's very simple and straightforward. It revolves around the Fed meeting that is going to be next week. But I want to go over exactly why I think this is a huge buy the dip opportunity and why the markets have this all completely wrong. And we are also going to be going over all of the data just around SoFi stock you need to know: the option flow sentiment, the short interest, the technical analysis, and also something that is blowing my mind. Goldman Sachs is selling Russian debt to hedge funds, which this Russian debt is going to zero as fast as April 15th. Russia will default. So you're going to see a lot of fears about a credit crisis, and that's going to be the next fear catalyst for the markets. I want to give you guys a heads up about that here in this video. So if you guys find value out of it, hit the like button and subscribe to the channel. And if you guys want to directly support the channel, get yourself 3 free stocks with Mumu, link down below in the description. When you sign up and deposit $1, you will get those 3 free stocks, and you will also get a free share of NEO on top of that. So 4 free stocks for $1. They have a community aspect about the app. You can get on there, you can ask questions, source information with other like-minded investors, look at short interest, do deep dive technical analysis in the app as well. Also, if you guys want to get free stock with Webull, deposit $100 and get 5 free stocks. Let's get into this video. I don't want to waste any of your guys' time. So SoFi, not a great day today. Not a great day whatsoever. That's very obvious here. But exactly what's going on? Let me bring you guys to the Fed Rate Monitor tool. You guys, I highly recommend you definitely use this for yourself as well. Investing.com/Fed Rate Monitor tool. Now we have the Fed meeting, which is next week, March 16th, 4 days, 19 hours, and 39 minutes away. That is going to be on next Thursday. What is very important to note is that the markets are pricing in a 0.25% rate hike next week. They're pricing in another 0.25% rate hike in May, another 0.25% in June, and then you start to see the divergence here where 85.5% of investors are expecting another 0.25% rate hike in July, and only about 14.2% of investors expect no rate hike. Why is this important? So the markets are projecting that rates will go to 1% by July. That's a very aggressive stance on the markets if you're going to jack rates up to 1% by July. Now, what is actually going to happen? The Fed has been very clear. They're going to raise rates 0.25% next week on Thursday. But what they've kind of started to lay the groundwork for during all those testimonies last week, where Fed Jerome Powell testifies in front of the Senate, he said basically they want to take a measured approach. They want to see how the data comes together and that they don't want to set anything in stone right now. So the markets are still pricing in like the worst case scenario. Rate hike after rate hike after rate hike after rate hike. But what is really going to happen is you will see that 0.25% rate hike. Fed Jerome Powell is going to come out and he's going to say, hey, we just don't know what we're going to do. We're going to watch the data and see what that tells us. He's also going to say that a lot of this inflation is due to Russia and Ukraine. So they don't want to jump the gun here because consumer demand is starting to slow down. You are going to see this credit crisis. If Russia defaults by April, you're going to be getting into your rate hike cycle, whereas you're going to see a lot of people taking major losses, hedge funds, banks, Chinese banks and hedge funds. Everything is interconnected. A lot of European banks are connected directly to Russia, more so comparatively to the United States banks. So they're connected. We're connected to Europe. Also, China and Russia have a lot of connections. We are deeply connected to China. So I hope you guys realize just how big this situation could develop to be. And I seriously would bet my whole portfolio on it that Fed Jerome Powell does not come out with a hawkish stance on the markets. He does not come out and say, hey, we're going to have to seriously start raising rates like much faster than we thought. I don't think that's going to be the case. If he does come out and say that, then I would expect the markets to take a big nosedive. But the markets are already pricing that in. So when Fed Jerome Powell is dovish, you will see a lot of stocks like SoFi that do go through massive rallies because, like I said in the beginning of this video, SoFi is directly connected to interest rates. If interest rates go from 0 to 1% by July, that means if you use SoFi as a platform, refinancing, getting a home loan or an auto loan or any other product, lending product through SoFi, you're going to have to pay more. Thus, you will have less demand for people to use those products, meaning less money for SoFi. But when investors realize, hey, it's not going to go as aggressive as we thought, investors are going to see that as a green light to flood back into SoFi. And obviously, this is only my take on this situation and why I am really bullish on SoFi right now, especially at these prices. But it is not financial advice. I don't know Fed Jerome Powell. He's not, my grandpa. I can't call him up. He's not my uncle. I don't know exactly what he's going to do. Nonetheless, if I did, I would bring you guys that information. But unfortunately, I do not know the guy personally, so I cannot confirm if he's going to be super dovish or super hawkish. But everything that I'm seeing makes sense for them to be more on the dovish side, give us the wait and see approach instead of hawking down on interest rates immediately. Now, that's really, why I'm so bullish on SoFi. That's what I expect for next week. I do think Monday and Tuesday or even Wednesday, you could see some nice green days in between there, but likely some fear on Thursday until we do get the FOMC meeting, which is at 2 p.m. on Thursday. And then I do think you will probably see a big rally after that, maybe directly after that. You're going to see a lot of volatility either way. But I do think the next couple of days after that will also be very bullish. Unless something else comes out with Russia-Ukraine, chemical weapons attacks, something like that would crater the markets. That would send us into a deep red spiral, right? But nonetheless, I think the odds are in our favor for SoFi to have a good next week after that Fed meeting, and the week after that looking very good, especially at these bargain prices, $8.50. I will buy as many shares at that price as I can get my hands on. Now, as far as the other thing that is just blowing my mind here, let's go ahead and read this first. And it says that Morgan Stanley's global head of emerging market sovereign credit strategy wrote in a research note this week that Russia could default as soon as April 15th, when the 30-day grace period on a $107 million bond interest payment. More bond payments worth $302 billion are due March 31st and April 4th, respectively, with 30-day extensions, according to Reuters. Russia's majority state-owned gas giant Gazprom has a $1.3 billion bond payment due March 7th. And due to the Russian ruble going down so much in value, these are dollar-denominated debts. So now you need over double the same amount of money, essentially, Russian rubles, to service that $1.3 billion debt. As Russian rubles, their currency, loses value, it takes more to equal $1. So it's around 200 rubles for $1 US right now. So you can extrapolate that, and you're going to just have it's pretty much impossible to service this debt at the current moment, especially with the kind of hits to their income that they are seeing now that pretty much the UK is done exporting Russian oil. So is Canada, so is America, so are other countries. It's a really bad situation for Russia and anybody that is tied to it. That's why I find it very interesting that you see articles like this that came out today. How Goldman Sachs profits from war in Ukraine. Loophole in sanctions. The Wall Street firm has told the public it is winding down its business in Russia, portraying its actions as supportive of U.S. efforts to stop Russian President Vladimir Putin. Then you see right here, it says Goldman Sachs, the giant New York investment bank, is cashing in on the war in Ukraine by selling Russian debt to U.S. hedge funds and using a legal loophole in the Biden administration sanctions to do it. So Goldman Sachs is basically giving out or selling Russian debt that they know is going to zero. This is going to zero. So it only helps to spread that contagion into our markets even more. You're going to see every dollar that these hedge funds are buying of Russian debt is going to zero. So here in America, we don't have a lot of direct exposure to Russia comparatively to Europe or China, but we have a lot of direct exposure to China and Europe, which gives us a lot of indirect exposure to Russia. Imagine it like this. If a hedge fund or Goldman Sachs had investments in Chinese firms, like they do, Chinese banks, or European banks, which we know they do in European countries, if those European banks and countries or China as a country, they had a lot of investments in Russia, they default, then it comes back on us as well. It's the trickle-down economics theory. So what happens over in Russia when they default, that's going to spark a whole new fear in the market. So I think we will see a short-term rally, and then once you're getting to the middle of April, likely to see a lot more pain coming back into the markets. But only time will tell. Maybe Russia has enough rubles or dollars to scrounge up these payments and they could delay this a little bit. But still, by the time summer at the very least, you're going to see that Russian default. So hopefully that provided you guys some context on this situation, why I'm insanely bullish on SoFi right now, but why there's going to be more fear and pain in the markets to come. Let's now get into the SoFi specific data. And for the short interest, you're looking at 18.25%. And for the day, you're seeing 6.8 million borrowed shares that were obviously sold short. So they're keeping the stock suppressed due to all of this shorting. It's not necessarily that people are actually selling out of SoFi. If you were going to sell out of SoFi, people that were selling out, that was really this move in here with all of the volume, right? In that $13 to $15 range, this is where people were selling. Now you're just seeing a lot of shorting that is helping to push the stock down, as there's not a very big reason for a lot of people to flood into SoFi right away. So the bid and the ask, a lot of people are shorting the stock essentially on the ask, and there's not that many people that are willing to bid up higher and higher, so those short positions start to kill the stock into the ground, whereas obviously they have a lot of share short positions, but they also have a lot of put short positions that they do initiate. At the same time, you are seeing a lot of long institutions as well. With the interesting flow sentiment for today, 12 orders totaling $2.28 million, positive order value of 73%. So you are seeing some bullish activity in that realm. As far as the cost to borrow max, though, that is sitting at 8.58%. The utilization is at 100%. So what that's telling you is that hedge funds and institutions are not willing to sell or lend out their stock for 8.5%, which is getting pretty high. That means that they think the stock's going to go higher than 8.5% here in the short term, because if you were super bearish on the stock, why would you not lend out your stock and let other institutions sell it short and just collect 8.5% interest per month? Makes a lot of sense. Why would anybody not do that? Well, they wouldn't do that because they're actually bullish on the stock. Now, the max pain for next week, that's going to be a very important one, because that's where you're going to see a lot of volatility, like I already went over, and the max pain is $12. So that is indicating that that's where the market makers would collect the most amount of money for selling these puts and selling these calls, would be around $12 per share. So that's where they tend to, pin the stock at. Didn't happen this Friday, so we'll just have to wait and see if it happens next week at $12 per share. The max pain for today was $10 per share, and we are obviously substantially under that at $8.52. Kind of wild, honestly, the drop that we're seeing under 10. Nonetheless, this is a sell your kidney by the dip kind of opportunity as far as I am concerned. And I think the commercial that I seen around SoFi, I just seen a commercial when I started filming this video over there on the TV. Maybe some good luck. Maybe we'll just have to see. But as far as the technical analysis is concerned, nothing too crazy to point out here besides that $10 resistance level that we are seeing. Inevitably, we will bounce above that, and that will turn into a support level. But in the meantime, you are seeing this 50-day moving average that is just coming straight down as well. We have seen a lot of resistance around that ever since November. So the closer this gets to 10, the more explosive move I think we could see, because when we break above 10 and we break above this 50-day moving average, which is currently at $10.84 per share, you're going to see a lot of trading algorithms kick in and start really bidding up the price of the stock. Now, as far as the 20-day simple moving average, that is also at about $10.84 per share. Excuse me, the 50-day moving average is at $12.29 per share. Sorry for that confusion there. The other moving averages, the 100-day and 200-day, are up here above $15 per share, which obviously we have to break out above 10, 20-day, and 50-day moving average, and then get up to $14 per share, and then we could see that rally. But I mean, it could be a long road before we're actually heading back to $25 per share. Maybe by the end of the year, depending how Fed Jerome Powell changes his stance, possibly on the economy. Maybe inflation goes down a little bit, and maybe the Fed doesn't have to raise rates as much, or maybe they can't raise rates as much. That would be a very bullish thing for SoFi, or just if the business of SoFi just continues to outperform and impress investors and growth slows down in the overall markets, investors will look for stocks that do have a lot of growth, which it's very contrary to popular belief. When the markets the general economy starts to slow down, you actually see investors tend to flock into growth stocks, because if the economy is growing 1%, let's say, but your SoFi is growing revenue at 35%, it makes a lot more sense to invest in something like SoFi, even at a slightly higher premium or multiple, than investing in, say, the S&P when it's growing 1%. So pretty interesting right there. That's pretty much all for the technicals. The MACD is slightly on the bearish side. This yellow CCC line is below the blue signal line, but I think you just have so much demand under here as well. I don't see us going down to like $5 per share. If we do, somebody slap me and wake me up, because what the hell is going on at that point? The RSI is approaching oversold territory. Historically, we've never really got to oversold territory. Once we do hit the line, we always tend to bounce, like right here, 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 and now we're approaching that again. So would look forward to a bounce next week. But nonetheless, I'm not your financial advisor, and this is not financial advice. The volume for the day was 71 million. So you are still seeing a lot of volume with the stock, and I think that's probably going to continue for a while. So that's going to be all for this video. Hit that like button and subscribe to the channel if you guys learned anything or found value out of this video. Get yourself those free stocks with Webull, Moomoo, and Public down below in the description of this video. Thank you guys for watching, and I will see you in the next one.